All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for May 5th, 2025. We are recording this 7 p.m. Eastern Time, and this is episode number 475. Um, my name is David Kosmeter. I'm the creator of Timing Research, and you should be seeing my charts right now, but we might switch that up and see some charts from the panel too. So, our panel for tonight is Dean Jenkins and Michael Filighera. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks a lot, guys, and welcome, Dean and Michael. We're going to have a lot of good information here, and I think we're at a pretty big critical point. So it'll be very interesting to see how you guys are reading this 57, 5,800 area on the S&P and how you feel about it. But jumping right into it, Dean, you want to give a quick overview because you had a good call last week when you said you were seeing a bit of a turn in the market that looked kind of bullish, and we obviously in the last week had a nice big move to the upside. So that was a good call on your part. But now we're up here. So how do you think? Things look now?
Yeah, I mean, you know what what's the saying? The blind squirrel finds nuts every now and then, right?
I just remember the broken clock is right twice a day. That's the easy one for me to
Mhm.
remember.
Okay. I'm gonna go ahead and share my screen.
Sure, sure. No, but
Um,
you showed graphically why there was a turn there, and so it was a very good technical call on your part.
all right.
You should be able to share now.
All right. All right, so I'm showing the S&P 500. I usually use the SPY because I like to trade that. It exactly mirrors the S&P 500. Yeah, so last week what I pointed out was, hey, we had the correction. Everybody remembers that. And then we had this pattern off the bottom of a high, higher low. And last week we were looking at it, it just put in a new high. And that's the definition of a trend change, right? It's not just a candle. That was a great candle, but a high, higher low, new high. And so we had that, and I said, it looks like, we with the price oscillator, the momentum was at the zero line. I said, it really looks like unless there's some disruptive force that would continue with the 50-day moving average, which is the smaller line, or the 200-day moving average being potential resistance areas. And when we said that, we were above the Ichimoku cloud. So, Dow theory set up, Ichimoku cloud set up, oscillator set up. And so, hey, it went up. So that was a good deal. And now here we are. We're above the 50-day moving average. We're below the 200. And we were off just a little bit today, and we had a 9-day winning streak on the S&P 500, which apparently is like a 20-year record, right? Not in terms of percent, but just in terms of 9 straight days. That was, and in the face of the correction, I was like, wow, that was pretty remarkable. So, of course, the question in everybody's mind is now what next? And that all lays on Mr. Powell's shoulders. You know, I think there's three big things. Obviously, the FOMC announcement on Wednesday. The announcement um, is virtually guaranteed to be, hey, no rate cuts this time. So it's all about the comments, looking forward, right? What does the Fed see in terms of the economy? Any barriers, inflation, tariffs, all that stuff, and then what are their forward-looking plans vis-a-vis rate cuts? So I think that's going to absolutely matter. We've also got, Thursday we got unemployment report. That's super important, and we've got some, we're just heading into the thick of earnings season. We got some big earnings coming up this week. We had Ford after the close, and they declined to give any forecast, which is, understandable given the tariff uncertainty. But we've got some other big ones coming up too. And we got Uber, we got Disney, we got ARM, and Rivian are some notables. So um, put all that in the mix. But I think the big one's going to be the Fed, right? And then if there's any breaking news, of course, on tariffs and particularly with China, that so it's just buckle up, hang on. There's good trades out there, but in a higher volatility scenario, I like to take a little bit smaller position size with a little bit wider stop to account for volatility. And just to, wrap up while I have the mic and the screen, last week I had showed, this looks like the, this is the Elliott Wave 3 up. This is a 4 correction. It looks like Wave 5, a continuation and extension is starting. And we showed these extension lines. If we just go from that low to that high to this low, right? It projects onto new highs. And it won't go in a straight line like the last 5 days, for sure. And it certainly could fall apart. Elliott's a great framework, but it's not a guarantee. So we'll just see. And I think the next big deal is Mr. Powell on Wednesday. So that's my take.
When you're talking about the waves, are you basically saying we've had like 3 waves down when we hit 483, and now we're going to do 5 waves up?
No, it's actually I'm looking at a little bit of a bigger deal here. Let me see if I can get a pen out here um in Zoom, and I think I got it. So this is all wave 3 up on a big picture. This is wave 4 down, and wave 4 often moves in an A, B, C. So this is really textbook. So this would all be 5.
I got you. So it's basically saying that the primary trend is still up, correct?
Yes, yeah. The correction wave 4, right, is a correction. Elliott wave typically moves like that, right? With this being a 38.2 to 61.8 correction, and we actually hit that right in the money. So we just for fun show the correction, right? 38.2 to 61.8, and we came right in. So that was like a textbook wave 4 correction.
Now, do you do any measurement from the low to the high, like from 6240 down to about 4800, and then going 61% of that is about 880, and if you take 4800 plus 880, you're at 5680, which is pretty much where it peaked out. Do you think there's any merit to that measurement?
Um, uh, I didn't quite.
In other words, we had a high of 6240. These are rough math. Fuzzy math, as George Bush would say. 6240 is the top, 4800 is the bottom. You take 61%, you got a certain number. You add that number to 4800, and you're at 5680. And the high so far on the rebound has been around 5724, but we're kind of trading underneath 5680 now. So maybe it was a little overshoot, or do you don't think?
We look for the, classic Elliott wave. We look for the beginning of wave 3.
Mm-hmm.
And then, from the top to the bottom, then what's the expected retracement here? And that is 38.2 to 61.8. And then we take the low to the high to the low and do an extension, and we're looking for 61.8 to 100% is the target. So the high end of that target is up here at 692.
I gotcha. And the 61.8 would be basically a retest of the highs?
Correct.
Ballpark.
Right.
So, all right, that's interesting. Michael, I know you have an Elliott Wave analysis that you do as well. Might be a little different than Dean's. How do you feel?
Well, can I share?
Yep. No. Yeah. Exactly.
All right.
I wouldn't want you to use Dean's homework. You know what I mean? You'd have to explain. You have to explain how he came to his answers. You know what I mean?
No, I'm going to explain how I can come to my answers.
There you go.
Okay, so I'm looking at it a little bit differently. Can you see my screen?
Mm-hmm, sure.
Okay. So I actually have 2 counts. This one is my preferred. And I do also think that at that high, it was the completion of a 3rd wave. But in mine, it's a primary degree 3rd wave. And so if I can continue to go out, because of my charts aren't lining up correctly. So in other words, it's like I'm not getting all of my data. I'm going to go back to 2011. But this primary 3rd wave actually began a long time ago, a while back. And it's actually a revision because I felt that it also could have been an intermediate third wave. But here's why I changed it and moved it out. I'm going to go back down to the daily. And the reason is that this corrective phase actually came down too far. My understanding of Elliott is that the most common retracement for a fourth wave is 0.382. But the other one that he gave us, the other comparative thing that Elliott did right and gave us, was that if I'm considering this, even if we're considering this an intermediate third wave, we'd be looking for the fourth wave to come down and find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree, which would be that minor degree. Now, if I just kind of slip out and go here, that's the minor 4. So under either count, I don't think this corrective phase is over yet. So that's why you'll see that I've labeled it as an intermediate A wave, but I could drop that down a degree and call it a minor A wave. And that what we're getting ready to complete is a minor B wave, which was going to turn around and then we're going to drop in a C wave. And ultimately, I think that the market can come back all the way towards 3,500 before we rally again. And that would be the rally that I think would again take the market to new all-time highs above what we saw at 61.77. Of note, because you're an options trader.
Yeah.
And okay, so there's very interesting, and this is actually showing up in the SPX. And I want to go out and just show you, because there's if you have any understanding of gamma and its effect on a market, whether it's positive or negative gamma. I'm going to go out to May the 16th. So it's the May expiration. And in the SPX, I got to go all the way out to 5,800. And at 5,800, there's a straddle. There's 29,000 in the puts and 20,000 in the calls. That's May. So that does present a very deep and large resistance area. It's a short straddle.
And you're talking about on the SPX.
On the SPX.
Yeah.
And
That's
so the next one I want to go to show you is the June.
Yeah.
The June. And both of these are the AM expiration too, because we know in the SPX there's a morning expiration, which just happens on the opening print in the SPX, and then there's an afternoon expiration. These are both on the morning expirations. Same strike, 5,800, and this one's even better. At 5,800, there's 37,000 on the put side and 42,000 on the call side. So again, when we collectively put these together, there is market maker. So these are the dealers that had to sell these, had to put, got these positions on.
Yeah.
And so they're negative gamma. And of course, that is going to present us with a situation that if this level is broken to the upside, then these positions get longer every tick.
Yeah.
And so they're forced to then cover and they'd be forced to come in. But in the meantime, what is sitting there is a wall of resistance.
Yep.
So if I go back to my own work and what I'm talking about here, and I'm looking at this and I'm thinking, well, now this one, I'm in the SPX and I am showing it as minor. So I show my two counts. One, I use the cash and the other, I use in the futures market. So I would say that this is in what we're finishing. That was intermediate wave 4 down there at the end of October of 2022. And we're in an intermediate 5th wave, of which we've done minor 1, 2, and 3. So still a third wave. So in that respect, Dean and I agree 100% that whatever finished up there was a third wave. It just kind of, we have to decide is like what degree it is. And so here I'd be expecting, because what would be above this, we're looking for the minute degree for that wave. And that was way up here. So what goes against this particular count is the fact that that fourth wave came and went very quickly. So the depth of this kind of shows me that either it's over and it kind of came down a little bit beyond this fourth wave. So in other words, a fourth wave of one lesser degree would put it down to minute. We blew that out. So I just take it down to there, and we kind of actually blew that one out as well. But I'm allowing it And in terms of that, just as an alternate count, and that would suggest that we are rising in a fifth wave, which again would then agree with what Dean was presenting, and that we will go and we should move to new all-time highs. Now, my work would show I use wave 1 over to wave 4 to give us my fib calculations for wave 5. The most common is 100%, which basically the market's already kind of gone through. And so the next one up would be 1.618, which is 5,900. So there's a couple of situations that I got going on. If I'm using the cash market, it could come through as a failure, because the first thing it's got to do is push through the 5,800, not just 1 month, but 2 months. So if it pushes it up in June and May, we might see a very quick spike higher. And then that completes the move, and boy, we come tumbling back down again, slipping back below 5,800 quickly, leaving that June position in place. So there's just a lot of things going on that kind of go along with it. And the other thing that I'm looking at with these two very large positions, and you start to go look at the curve to see just where distribution might be. And prior, because of this huge drop down that we had based on the tariffs and the start of the trade wars, there was just, because the speed at which we were falling and the markets not really being prepared, traders not really being prepared with downside protection. They were good. They were a little bit call heavy at the time. So we had this big flip where we saw all of these puts kind of getting put on at 4,000, 4,500 in the SPX. And so as April expired last Wednesday, a lot of that gamma dissipated because it expired. And we didn't see traders rolling those big positions out in the same hurriedness that they had before. And there's also the big conversation about volatility. The volatility still remains closer to 25 than it does to 20, or back to what we were considering the norm for a risk-on trading environment, which is like 14 to 18. Well, we're not getting there. Why? Well, because they're finally realizing volatility has been marked too low for a very long time.
Right.
And so, again, speaking just to the absence of protection, and just wondering what are they doing in terms of options. We have those two large straddles on, but we're not seeing traders come in and put any calls on just to play the upside. So it's like, well, what are they doing? They're not really doing much, but they're playing in the zero DTEs. And so what that does to the curve is it kind of gives us what they call kurtosis, where it's just like it's all gathered around 5,800, and it totals 5 billion, a negative 5 billion.
What is the expiration date on that straddle that you were showing for May?
May 16th and then June 20th.
Oh boy, that's where
I know, right?
That's where all my options. That's where all my options are. Those are the dates that I picked for options, either on the 16th or the 20th.
What? Right?
Yes, because I'm expecting major action by the 16th or the 20th.
Yeah, I think you're in good company.
No, and I'll tell you the other thing that's interesting, because I use the moving averages, and on my daily I have a 250 SMA at 58.25. But more importantly, on my weekly, I've got a 24 SMA and a 36 SMA coming in at 58.05 and 57.95. So that's the neighborhood. Plus now you're telling me that this gigantic straddle is going on at that area.
Yeah.
So I think one of two things is probably going to happen. Either it tries to go through there and fails, or like you were saying, and Dean is kind of saying, is it's going to possibly go through that area and really get kind of bullish. But then maybe if things, because the news is obviously very fluid, right?
Yeah.
And maybe then it would reverse from there. But I definitely think this 5,800 neighborhood, plus or minus whatever the heck you want to say it, I think that's a very important neighborhood. And I think Dean was even showing the 200-day average is somewhat in that neighborhood. So there's a lot of action right above us here. And
right.
Right.
I have one fib that is 57.99, and that would be for this Well, let me just bring this down to the back to the daily.
And one last thing you brought up, which is obviously key, because this is what makes me very happy following the VIX. And when that VIX can't get underneath 20, and now it is up at 23, if it can't get underneath 20, which is really the base, I see it as the base 20. If we rally to 5,800 and you're at 20 on the VIX, and that's the bottom of the VIX, and 5,800 is the top, I think that's a extremely great time to consider aggressive action, because you will have gone up 1,000 points off the low.
Yes.
In an environment if there's no deals been signed. And President Trump doesn't sound like he's going to fold like a total lawn chair here.
No.
But, if he does, then obviously 6,200, who cares, right? Because we're going to have the debt. We're going to have the deficit spending. We're going to have the big debt ceiling. So there's nothing different between that environment and what's been happening since 2008. Print money, spend more than you make. How do you think we got from 2008 to 2024? We didn't go from whatever the heck the S&P was, 2000 or whatever, up to 6,200 almost because of tight money.
We definitely could.
Yeah, we got there because the money's been thrown around here like drunken sailors.
Yeah, well, I don't disagree with the upside calls.
Yeah,
I agree with what we're all saying. Basically, is like there has to be some surrounding stimulus that's going to support the market to go there. I'm also beginning to hear that Tesla and Nvidia are falling off the "we love you" wagon, and we started to see both of those get hit today. They always recover, but I think that's just options trading. But what I found interesting as well is that if I'm looking at the C wave here, and I'm thinking this is in my preferred count, that to finish the B wave, here we have the 5,800, but a very common retracement back up for a fifth wave is 1.618. That it would be 1.618 times the length of the first wave, and that's 57.99. So I got so much lining up there. You've got a lot lining up there.
Oh yeah, I think it's absolutely huge. And like I say, the only reason I'm a little bit thinking that it's not going to get through is because that VIX seems to be unwilling to get under 20.
Yeah.
And it seems to me like going 1,000 points with no deals signed and deficit spending coming. And the store does seem to be higher priced. Just the simple grocery store seems to already be going to the upside. So I don't know.
One last thing I will add, because Dean mentioned this, but I think the importance is even greater. Dean, you were mentioning that this rally here, and this is again in the SPX because the ES had a down day, but in the SPX it was 9 green days in a row, and the SPX has not seen that since 2004. So these are we're getting all this, and yet the VIX sits at 23.
Yeah, I was saying also that the bulls have the story because they've got the 4% unemployment, they've got the retail sales going up, they've got wages going up, they've got the restaurants and bars all full. So where the puck is right now would indicate we are going to go up and maybe make new highs. Everything we're talking about as far as a correction and the tariffs may have a problem, that's all where the puck might be going. So from the standpoint of speaking current story, the current story is not bad because, again, people are out there spending and they are employed and they have a history of spending as much or more than they make. So as long as that doesn't change, again, all that talk about the economy will slow and all that stuff is predictive. The stuff we're talking about now is all pretty good. Dean, is there any stocks that you've been looking at that you're kind of seeing might have some interesting potential right now?
Yeah, there's a couple things that I like for sure. So I'll go ahead and
share screen. Yeah,
share my screen,
please.
Yeah, I can't talk about a chart without, it's like, you got to have your hands to talk, right?
It's like talking about a sunset. Much better to see it, right?
Yeah. Wow, what happened here? So this is PayPal. I'm gonna get my chart scaled correctly. This big picture is important because look how far down PayPal has come. And I don't, they have some competition, they have some issues, but some of the competition they've bought. And they still make a lot of money.
Hmm.
And they've come down a long way. I think they got a ways to go. And in my advisory service, we got long here, right at that $62 level. So that's going really well. Now we're above the 50. And I think it's got legs up here to at least up to the 200. So up to 76-ish. Past
Yeah.
earnings,
Hmm.
right? Earnings were good, decent forecast. And that's just, that downtrend is clearly over. High, higher, low, high, a little bit of a pull, right? That's a nice uptrend with some decent momentum. So I still think PayPal looks um, looks good. Um, One I'm watching for a trigger
Hmm.
is Sirius XM. So it's not ready yet, but I like its upside potential. It's a little bit it's been beaten down, right? But it found a really strong base. If we just draw a line here, right? I kind of took a mean between these two. It's not a perfect double bottom, but and then even on a bit of a miss, right? It's had a couple up days. If it breaks out of this area, about 2235,
Hmm.
that could head up. And even, the scale, is kind of hard to see here, but even if it just goes to this prior high, um, if we catch a breakout here and it goes up to this prior high, and let me just get that, kind of right? That's a 10% move. And if you got some, strike or two in the money call options, that's going to make you some nice money if it triggers. So I think that's pretty interesting.
It's kind of a
And
Buffett holding, isn't it?
and they got that in their back pocket, right?
Yeah.
Um,
Mhm.
yeah, Warren Buffett is a large shareholder in Berkshire Hathaway of Sirius XM. He believes in their model, and so that's good news.
Hmm.
I've been playing around with. I'm going to be doing a webinar here soon, putting it together. Played around with using ChatGPT and refining some queries to go find trade ideas. And that's a super interesting thing. I'm kind of stoked about it. It's not
Hmm.
perfect. Um, but and like ChatGPT does not go look at live charts. You can make it do that with plugins and APIs and stuff. But if you just want to use, the trained model, it still does some super interesting stuff. And it's basically like, I equate it to you get to listen in to the conversations of 1,000 traders, right? Because all the blogs and the boards and the forums and the Substacks and the Reddit, right, and the articles being written, right, in a couple seconds it can go scan all that, right, and compare it to some historical data, and you can give it setup ideas and go, hey, go find me something that meets these criteria, this much liquidity, volume, optionable, and then this kind of setup, and it will go do it in the blink of an eye and come back with ideas. And so I just ran a query before our session today about hey, go find high liquidity optionable, oversold that may be finding support and ready for a bullish retracement. So one of the ones that came back with was UNH.
United Health, huh?
Yeah. And, massive gap down on earnings
Yeah.
and then a slide. And now, is this going to be a reversal? Well, it's worth watching, right? It's certainly not qualified yet.
Mm.
But that, I wouldn't have really thought of that one. So I thought that was cool that I could just put in, go find something like this. And it came back with a list of about six. And this was one of them.
Now you have a low there surrounded by higher lows. Are you finding that encouraging, right?
Uh
Right there at the bottom.
uh right here.
Yeah, yeah, there's a low. I'm on my graph. They made a low at 393, and then the prior day was a higher low, and then today was a higher low. So that's not the
Yeah,
worst thing
so
to
it
see.
it, it could be finding support and potentially turning around. So
And
this is too early. It hasn't turned
yeah,
yet.
yeah.
But, even if it just only went up, if that gap turns out to be, hey, new information, new news, new pricing, right? But if it
Yeah,
goes back up to that gap, right at the bottom of the gap at
yeah,
487,
yeah,
say we were able to trigger, somewhere in here, I'll take that,
yeah.
right?
And
So
there's some moving averages on the 1 month graph, which most people would call the 120-minute graph. That's right up in that neighborhood. So that could be an attractor, you know. And of course, like we've seen, I mean, I think this last 9 days of up is just who's going to sell if things are getting better on the trade stuff. I mean, you're going to have nothing but buyers for the last 9 days when the news says that maybe there's deals coming. So it's not too shocking you have 9 days in a row, and it won't be shocking if you have 9 days in a row on this thing if anything with healthcare would improve as far as the news.
right. So, yeah. So uh I didn't hear either of you gentlemen opine on the Fed. I'm curious to see what you think, how you're, applying a little game theory, if this, then that. What are you guys thinking?
Well, what do you think, Michael? I'll come in after you.
I, I think that as was already mentioned, I don't think there's going to be any action taken. And I think what the world, including most of the United States at trading, uh, are going to be listening to the conference call and trying to establish the tone of the conference call. I think just from what he has said in the past, I believe that he will continue to say that the Fed is an independent organization, and actually it's a privately owned bank, and that they will not be moved or pushed by the executive branch of the federal government. And I think that is a very strong statement, and that I believe he intends to finish his term, which is May of 26. So I think that he's going to come out and talk about that they're going to continue to their goals, that he's going to talk about employment. Um, I'm finding it interesting because we're still not seeing any true fallout from all of the Doge work that's taken place, and so I think that's yet to kind of be felt. But I think he has it well in hand, and he's not going anywhere. And I think that on top of it, on Friday, there's no economic data. It's all Fed people speaking.
Yeah.
So I think they intend to just keep their message strong and continue to stay on track. And that's the crowning glory. That's the end song for them, to meet that goal. They stuck to it. They stuck to the plan. And they continued to lower interest rates, but they were conservative about it, and it paid off. So I hope.
I'd like to share a chart real quick that kind of illustrates what I'm seeing. Is it okay? Can I do that real quick?
There you
Please.
Go. Okay. Can you see the chart now?
Almost.
It's loading. Yeah, I can see it now.
And
While you're teeing up your chart here, Jim.
Yeah.
Michael and I both agreed that what Mr. Powell says in the press conference is going to be a great import.
Oh yeah.
What a responsibility that how you part your hair and the exact words you choose, right?
Oh yeah.
Which hand do you carry your briefcase in, right? There's legions of Fed watchers who just look for every little nuance, right? And so what you do, what you say, literally billions of dollars change hands. That would be daunting.
Yeah.
Yeah.
Oh,
Yeah,
yeah,
no.
You're right.
And you got a president, but that's kind of like why I like using the moving averages and the charts, because this thing shows me that yields have been rising ever since 2022. And you can see that the last time they did a big cut, which was September, everybody thought rates were going to really drop. But I saw that this blue line was right there. So I was actually thinking that is as low as the rates were going to go. And then we went up. And then recently we went down under 4%, and people thought the rates were really going to drop again. And I said no, because the blue line is rising. And
Mhm.
until the blue line is pointing down, I don't know that you're going to have any sustained drop in yields. And so
Mhm.
right now, since we're trading above red, green, and blue, I think if this thing were to start breaking above 360 and 480,
Mhm.
maybe that big deficit spending that they're doing, because it's a $1.3 trillion deficit in the first 6 months, and this debt ceiling, if they don't have offsets, that's the big thing, offsets, then this could make the bond market very nervous. And if the
I
bond
think
market
so.
starts getting very nervous here, with the trend already being up for interest rates,
Mhm.
and the whole planet is saying the second half of the year, we're going to get 4 cuts. This chart doesn't look like 4 cuts. Now, if we get under 4% on the 10-year, 390 on the 10-year, I think you're going to get all the cuts you want.
Yeah.
But I think until that happens, and the positioning so heavy on that rates are going to be dropping, I think there's a real risk that something weird could happen and we could actually see rates rise, which would
Yeah.
totally make, and I'm not saying that, I'm just saying the blue line's rising. I'm not rising, the blue line is. So
Yeah.
my take is if you don't see underneath 390 on the 10-year and you're looking for a lot of cuts, you could be waiting for Godot.
Can I add a conversation piece that's going based totally on what you just talked about?
Mm-hmm.
And that is, I'd like to hear what everybody's opinion on the fact that China is selling their U.S. debt.
But that's
And
been going on for a long time, they tell me.
well, it has been, well, yeah, I
Yeah.
don't know how long.
They said 2 years.
Um, what did they say?
2 years.
But now they're doing it a lot faster and a lot heavier.
Yeah.
And so, and then we're watching the dollar not be able to get back above 100. And so I feel that, I think Jimmy, you and I talked about this prior, that there's one way to curtail current activity. There's one way to kind of say, we're going to negotiate with you on these tariffs and you're going to back down on all of them. Otherwise, we're going to annihilate your debt and your bonds are going to go up and your interest rates are going to be above 5%. You want to play hardball? It's like, okay, step up to the plate. I think they
Well,
got a fastball coming and it's gonna produce a strikeout.
I think he could fold like a lawn chair, go to 10% flat on the tariffs and go to 60 or 50% on China. And I think if he does those two things, which I think is probable at this point, then you will have the ability for a sigh of relief. But even at those levels, those tariffs will cause a certain amount
I agree.
volatility.
I
And
agree.
the fact that they're canceling these boats to come over here, that cannot be reversed that quickly, that's problematic as well. But, this is a wild world, we're 6,200 down to 4,800, back to 5,800 all in a month or so. I mean, obviously it's a pretty weird
Yes.
world out
Yeah.
there. So, yeah.
Yeah. Oh, it's incredible. Yeah.
Do you have any feeling on the price of gold, Dean?
It went up.
Yeah, it did. That's it. It definitely went up.
Yeah, and I'm just loath, whether it's gold or any chart. I don't chase mature trends. I just
No,
don't.
no, 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 no.
Um,
Yeah.
and so I haven't even been watching it after it put in record highs.
Yeah.
I'm way more interested in oil. And that was a big shock over the weekend.
You're a value man. That's pretty cheap. Yeah. It's down to like 50 something. Let's put the crude up there and take a look.
And what's frustrating,
Wow,
sounds
look
like
at that
Mike
divergence, Dean, huh? On the RSI?
and Michael, it sounds like you're in California,
Oh,
right? And so I'm in Washington State. So we have the privilege of paying the top two prices in the country. And
Mhm.
and this slide in oil hasn't showed up a penny
no,
at the
no.
pump.
Yeah.
Not just over the weekend, over the last couple months. It's like
Yeah.
what the
Right.
heck, man?
Right. We're still closer to $5 than we are to $3.
Yeah, we're at like 370, 380 for
Oh,
Yeah.
you got a spare room? I'm moving.
Yeah.
like
I filled up the car on my trip there, Michael, and it was not a pleasurable
I
experience.
bet you got shell shocked,
Oh,
dude.
God. 550 or whatever the heck it was. I
Oh,
only put like 10, I only put 10
you were
gallons
in
in. It was
the
like 50,
redwood. You were in where they have to, walk it in.
Oh, I got you. Yeah.
Yeah. But
my compatriot that I do my live sessions with, she drove from Pennsylvania to Florida and said in the southern states it was in the low $2.
Yeah.
wow. Um,
I don't even know what that would look like, right?
yeah, really. It's like to fill up your tank for $25. Okay, I'll take it.
Yeah, I just
But
feel
Dean, how do you play crude? It's a falling knife, really here, and all the moving averages are above the market. I mean, and these guys supposedly in Saudi, they're supposed to be increasing production. Um, that's the hard thing to figure out. Because this stuff, I mean, it could go into the 40s for all you know, right?
it could. OPEC Plus over the weekend said they're going to open the spigot in
Yeah.
June, right? So that
Uh-huh.
June's a long way away, right? Um, this looks like a support level, right? I don't know, I don't think it's going back to 80, but it could go back to 65, right? In the
Yeah.
short term, if it holds up. You gotta
Yeah.
watch it. Gotta watch it. Right.
Well,
So
certainly on sale. If you like to see things on sale, this is one of them where they're on sale.
yeah, and it's just interesting.
Yeah,
I'm not ready to
definitely.
trade it yet, but it's got my attention to
Well,
watch.
the other thing that's interesting to me is it looks like there's a big divergence because you had a drop there where the RSI went way down, and now you've made a lower low and the RSI is clearly diverging. And that is door number one as far as looking for a place to buy. Now, all you need is to get one of the shorter term charts, be it a 5 day, 1 month, or, you know, 30-minute or 2 hour chart to turn up with some with a little bit of something underneath it, then you could have something going. But the first step for I like is a divergence in the RSI because that generally is followed by some type of a buying activity sometimes.
Yeah.
Well, you got the chart, Jim, just in terms of what's interesting. If we got a minute, bring up Microsoft, please. So I occasionally you get things right. Um,
David, you got that?
oh,
Oh,
David's got the chart up.
Yeah,
sorry. Which chart did you say? Microsoft?
Microsoft.
Yeah.
MSFT. Yeah.
Sorry, I got distracted by something for a second. There you go.
That,
Multitasking.
by the way, that's a good
Yeah.
that's a good example of a divergence, Dean. Huh? You had a similar low and a way different there, and look what happened there.
And I was making the case, I'm a technical trader. I look at the charts, but I also, I wouldn't say I look at fundamentals in terms of, PE and all the different ratios, but just what's the story, right? What's going on with the company, right? And I made the case that, gosh, I think Microsoft kind of got caught in the downdraft of the tariff noise.
Mm-hmm.
And it's like, well, what's the tariff on your Microsoft 365 subscription, right? Or your cloud stuff, right? Well, there is none,
Right.
right?
And they
And
own the cloud, right?
Pretty much.
Yeah.
so it was like, this looks like, again, they just got caught in the current, and people are going to wake up, and then they had their earnings and say, yeah, guess what, right?
Yeah.
So that was actually beautiful, and it was fun to be on the right side of that too. So
Yeah.
Is Netflix going to really be hurt by this 100% tariff? Because it's been a moneymaker without stopping, but then today it went down, but not much, pennies. It is
Well,
coming off of Mount Whitney over here, though, isn't it?
well, you know that the new tariff today is that there's going to be I think a 10% tariff on all films produced or filmed outside of the United States.
So they said 100.
A
Yeah,
100%
I think he
tariff?
said 100. How,
Well,
how,
there you go.
how
I
do you
was
put a
way off.
tariff on a?
Times 10 times 10. There you go. 100% tariff. If you so happen to
is that is that if it was shot offshore, or if it was an
Yeah.
offshore company,
If it's over like in Korea where they're doing a lot of business and stuff like that.
yeah. But I mean, a lot of American production companies go on site somewhere,
right.
right?
Now
Does
you
that
got
count?
100% tariff.
Yeah, no, they don't care why they went. They just said, But I mean, there's going to be like everything else, carve outs and all that kind of stuff.
Yeah, I don't know.
Wild. So, and I know that Netflix, Apple, Amazon, they all got studios now. So we'll see.
Mm.
We'll see how that one goes over.
You were saying you have a webinar coming up, Dean. Did you want to go over a little bit about some of the details on what you're going to be covering and how's it going to be set up and stuff like that?
Um, I'm putting it together. So
Okay.
I mentioned it just to, as a backdrop to, I'm trying to learn and do some interesting stuff with with the free AI stuff with ChatGPT and stuff. Like there's a lot of paid AI algorithmic stuff out there, right? But it's like what can folks do for free on their own, simple. And it certainly isn't going to spit out, close your eyes, pull the trigger on a trade, but I think it generates some ideas to go look at. And
Yeah.
that's what I'm trying to um, curate. So that's coming up, and I'll promote it when it's ready.
I'm going to hit you guys with a couple of stocks in quantum computing. IBM just announced they're going to be putting $30 billion into quantum computing. Michael, something like QBTS. Do you see an opportunity in D-Wave? Supposedly they have the fastest computer in the history of the planet. But what are you thinking here on this thing?
It doesn't look too bad. But the troubling thing is off of that high in March, early April. It's done what appears to be 5 down, and now it's doing 3 up. So unless it breaks quickly above that, what is it, $8?
Yeah, $8. Yeah.
Yeah, 8, $9. That would suggest that it's a 1-2-1-2. And that's like, then the spike would be the third wave, and that would be healthy for it. And then you could just run some fibs. I mean, you could start by running fibs from the high to the low of the most recent, and that'll give you, some resistance levels coming back up. But I think that you're going to find some resistance around 925-ish, and then just below 10, and then new highs. I mean, it probably, I don't know how old the company is, to say, how much data you have, but it doesn't look like it's that old, since it seemed to be trading as a penny stock for quite some time. So I think it's a chance to get into something early. And if they are being associated with anything artificial intelligence, then incorporating it, then I think, yes, it's very worthy to, you take a shot with it. Do they trade options? Do you know?
Oh, sure they do.
Oh, there you go.
I bought some $6 calls, so they better. I hope they trade them.
I hope they got them. Yeah.
Dean, what about IBM?
Just on the quantum,
Oh yeah, sure.
the
Yeah,
whole, the whole the whole quantum space, the
yeah,
most interesting thing. Yeah, the whole thing's interesting for sure,
sure,
right? And they're doing
sure.
some incredible stuff. But it's just kind of uh, uh, funny, I guess, right? That Jensen Huang, the CEO of NVIDIA, he
Hmm.
had to eat some crow, man, because he had come out, there were some announcements of some breakthroughs in quantum computing, and he really poo-pooed, that's a long way from, being anything real. And then, wasn't a month later, he kind of goes, oh, actually, they got some working, yeah, it's real. Wow. Oh, my bad.
Yeah, I'd like you to have an opinion on Rigetti, Dean, RGTI. That had a little bit, maybe a better look to it than the other one, and that's of course they both have very heavy short interests. So if it ever gets those people to cover, but pretty much the same game as the other one.
Yeah, I'm pulling it up. I see David's there.
Mm.
So that actually, you see, is that a 200, David, on the dark blue line?
Yeah, 200 EMA and 50 EMA.
Yeah. So if you just look at the last three, they're almost like triangles, right? We had a high, higher low, high, higher low, and we're into a new high. So that's an uptrend, right? It's not dramatic, but it's real, right?
Yeah, it looks like something's going on.
Looks
How
like
about a couple of?
is that a on your trading view? Is that earnings coming up in a day or two,
Mhm.
David? So
Yep, they're going to get news.
unless unless I'm specifically doing an earnings play, if I'm just trying to do a swing trade, I won't take it into earnings, right? There's a different approach if you're gonna take it into earnings.
Another tech one that people were kind of thinking might go someplace is SoundHound, SOUN, and they do a lot of the voice stuff. And boy, that does seem like it's at some kind of a juncture where it's going to do something with them both. When they meet like that, it's generally a little bit odd because those are two very different time frames, right? For them to have the same price as on the average, it's pretty weird.
Yeah.
So
Trading
this is
stuck.
But
are either you guys looking in the commodity sector at all? Because there's some things that are supposed to possibly be affected by these tariffs as well, like the grains.
Yeah.
no,
It's all going to be on our own harvest. But we get a lot of our soybeans, in winter. Winter crops are coming out of Brazil. So how is that going to get hit? So yeah, I think it's there, but I don't know if we're really able to. I mean, yes, obviously, commodity traders, wheat traders, they're in there making their plays. Um, but I just think it's terrible because it affects us as consumers because there's so much wheat in everything we eat. So,
One last thing before we close up. What about the Russell Index, IWM? I mean, that is on a value play, very much discounted to both the Nasdaq and the um, the
yes,
S&P.
yeah,
It's had a good run here, but this neighborhood here, if it could get through here, I mean, do you do anything with the small caps, Dean?
I do, and there's a axiom that the small caps, lead the large caps up and down, right? Um, that they're just more sensitive to, changes in the economy. Um, and so if there is going to be a big run, right? If there's a breakthrough, what does Mr. Powell say? Any breakthroughs on tariffs, right? And it's like, wow, it looks like all the indexes are going up, percentage wise in terms of who's leading that, it could be the small cap. So I like trading IWM.
Yeah.
yeah.
Because
Okay.
one thing you made a good point is they are not a bad indicator because the small caps never made a new high over the 2021 2022 area. It went up and kind of tested the high,
Yeah.
but it never made a new high, and then it all, of course, fell out of bed. So while everything else made new highs after 2022, this thing didn't do it, and maybe that was an indicator that none of them should have done it. You know what I mean?
Well, and I forgot the exact weighting, but even the S&P 500, right, which is a big index, right? The, you know, the Mag 7 plus a couple others really dominated the S&P 500 moves, right? It wasn't a broad-based um, uh, move up to the top.
No. Yeah, I would agree.
And
You know, the
so,
semi.
so you don't, so the IWM, the point there is the IWM doesn't have that, right? It is more of a, what's the whole group doing where the S&P 500 and certainly the NASDAQ are dominated by a few huge players.
Yeah. Well, we are, what do you call it? The one last thing is SMH. Let's look at the semiconductors because they've had a nice big bounce. But do you have a feeling, Michael, on the semiconductors? And
I think a whole bunch is going to rely on what happens in NVIDIA,
right,
and we're going to know soon enough. And
yeah,
if they really do turn the tide to the downside, SMH goes with them. Because
yeah,
NVIDIA is what, 21%
a
of SMH?
huge part. Them and Broadcom, AVGO. You want to take a look at that real quick because that's actually, I think, a better deal because
I
I
do
think
too. I
what
would
they're doing
agree
is
with you on that.
they're going to individual companies and giving these people specialized. As you can see, the chart looks much better on that.
Right. I would agree with you on Broadcom, maybe even, and get this, AMD taking the lead.
And they announced here this week too. I talked about that in my newsletter as it'll be interesting to see if they can get a bounce out of this 90 area, wherever it is.
Yeah, they did. They're
Yeah,
back above par. So,
yeah.
But
So,
again, it needs more. And now it's still sitting on that moving average. And so it needs to get above it, slip back down, hold above it, and then it'll spike. I think we get a decent rally out of it.
it's encouraging the RSI is above 50 on it. That's for sure.
Yeah, but you don't want it to go too fast. But I
Yeah.
agree with you on that as well. If I had to choose, I think Nvidia. I'm hoping that they don't. But then again, no, we have no word other than what Jensen said about that due to the tariffs, because they export back to China their super AI chip, and he's already told the world if they don't do anything with the tariffs, we're going to get hit with a $5.5 billion tax bill. I don't hear a whisper. I hear nothing coming out of the federal government on that one, that they're going to step up and maybe support a U.S. company.
Yeah. That's a shame.
So, if AMD is not in that same bind and they can take a lot of that and their earnings are going to show it, then yeah, they're going to supersede.
Now,
So
Dean, you've got the follow me trades going for quite a long time here, but you have a couple of new twists that you had that you've changed the business around a little bit. Can you explain again how people can benefit from how you're helping people with the follow me trades?
Yeah, and David just posted the link to my website, and I've just recently started a Substack, and I'm transitioning the stock picks and advisory in our live sessions over to a paid part of that Substack. So I've just found that platform to be really, really, really good. So I don't know, David, do you have that link, or I can probably pop it in there real quick. So there's a free newsletter, and
Yeah, there it is.
okay, there it is. Thank you. There's a free newsletter, comes out twice a week. Just give kind of a market overview, what to watch for, and then there's a paid portion of you know uh, stock pick advisory. You get to see our whole funnel as we take in candidates and then move them through the funnel, qualify them, and then finally what trades get triggered and qualified, how we manage open trades, and Monday through Thursday live sessions for get to watch it happen, get your ideas analyzed, do some education, on the how we do this. So yeah, anybody's interested, go check it out. Sign up for the free subscription to the Substack and get a feel.
Sounds great. Hey, Michael, how can people get a hold of you, and what do you got cooking now?
You can get a hold of me, Michael at mjf1partners.com. I'm working on a couple things. I do have a live stream, but I'm going to probably reform that. It'll come back as a trade room again. I post daily through YouTube memberships, and I basically have two levels that actually three, but two that are more important, and that's the bronze and the silver level, and that just includes my daily analysis and weekly analysis and a morning update on the S&P 500 and the NASDAQ 100. I also do post on YouTube for the Dow Jones, for gold, silver, platinum, and I'm just trying to reorganize a little bit and be more effective. And I am also David's next synergy event. I will be talking a lot about a new project that I'm putting out, and it'll actually be with a live stream or trade room. But most people are all more interested in is like your trades and how you're doing them. And I think that's all great, but I think that we need to remember our mindsets. So I'm doing a lot of mindset work, and in order to help people that want to trade but can't seem to get over their humps. So it's helping them do that.
Sounds good. As far as Option Professor is concerned, we have a webinar tomorrow with trading indicators. And if you'd like to go to it, you could shoot me an email at optionprofessor@gmail.com and ask for the link, and I could send the link over to you as well. So optionprofessor@gmail.com. Webinar is tomorrow, so do it if you'd like to. Hey, Dean and Michael, thank you guys for being here. We're going to have to see how this thing shakes out. This 5,800, 5,700 area is going to be very interesting. And I think by the middle of the month or to the end of the month, we have a pretty good idea how it might reconcile. So everybody should get a hold of you guys and get prepared for that.
Let's do the May 18th show, Jim. It's my birthday, and I'd love to do the show with you. We'll
All
know
right.
what happened on May 16th.
All right, we'll see. And Dean, thanks a lot for being here as well. I'm going to send it back over to David.
Oh, one other thing I was going to mention, I didn't look it up in time to fit it into the conversation, but um, the betting markets, Kalshi and Poly Market. You guys ever look at those?
No.
No. Yeah, they're really interesting, but both of them are showing a 98% chance of no change for the Fed
Wow.
Well,
Yeah.
I
rate.
would say
So
that is, I would go with that, although the 2% probably doesn't pay much, huh?
No, it doesn't. You're right. Speaking from Las Vegas, yes.
I don't think the payoff's big when it's 98% sure it's not going to happen.
yeah.
Be a
So
good payoff.
anyway,
Be a good payoff if they went the other way, though.
yeah,
Yeah.
there's a lot of interesting stuff on those sites. It's, like politics and economics and who the next pope is going to be and all kinds of stuff you can bet on there.
There you go.
So
Great.
anyway, just thought I'd mention that. All right. So thanks, guys. Great conversation as usual. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and Substack and your favorite podcast app. And then I just want to thank my guests again for today, Dean Jenkins of FollowMeTrades.com and
All right,
Michael
thank you.
Filighera of LogicalSignals.com and the Option Professor of OptionProfessor.com. Oh, and the Synergy Trader event that Michael mentioned. All three of these guys are scheduled to be on, our next big Synergy Trader event that is scheduled for next week, Tuesday, Wednesday, and Thursday, May 13th, 14th, and 15th. We will have 30, the title is 30 Pillars of a Profitable Trading Plan. So I'm going to have 30 different trading educators on to each explain one aspect of their trading plan for you. So and that will be available on TimingResearch.com. So all right, that's it for today. Thanks everyone.
Thank
Thank
you.
you.